All right, we are with Max Rafaga. He is the founder of Finimize. Max, first of all, thank you so much for being with us.
Thanks so much for having me.
So, look, you are the founder of Finimize, like I just said. For those who don't know, tell me about what Finimize is, what it does, and why everyone needs to go sign up and be a part of that, the whole movement.
Yeah, so we like to say that we're building the world's largest and most engaged finance community, and for us, that really uh, boils down to two pillars of our offering. Number one is we produce in-house content. It's all around financial news and analysis. So we have a daily brief that you can either receive in your inbox for free as a newsletter, that you can read within 3 minutes, not having any jargon in it. But we also offer within our mobile apps, text and audio, what we like to call analyst insights, where our team of analysts that we have in-house, they share all of the insights that they've been gathering from researching the markets,
Mm.
and they help you spot investing opportunities. And then we have the community side of things, which also to a certain extent, or in a way, produce content because there's a meetup that happens pretty much every single day of the week, which is hosted by a Finimize community host. And
Mm. Wait,
what
like
happens
a real life meetup where people get together in a place?
exactly, yeah. So last year we connected something like 10,000 people at a physical meetup, literally all over the world. This year
Mhm.
we went virtual, and we've now so far this year have connected 30,000 people. And what happens at these meetups is um, our hosts will understand what the local community is interested in. So let's say you live in Australia, the local host will know these are the financial topics that people want to find out more about, and they will typically get in a guest speaker so that our audience can really learn from an expert. And but the other component there is that the attendees learn from each other. And so an example might be, let's talk about sustainable investing and the rise thereof. And we might have, like we did at a recent meetup, we had the global head of impact investing from JP Morgan come and essentially share her expertise with our audience so they could learn from a real expert.
Mhm.
But then they could also go and speak to other members and learn, hey, how did you pick your first ETF? What broker did you use when you were thinking about buying that sustainability ETF? And people can really share from each other, and that's content as well, right? And so the combination thereof is this
Mhm.
high quality analyst produced financial insights paired with the experience from the community, with the ultimate aim that we want to empower our users to become smarter investors.
Gotcha. So that's what makes it different from your typical, CNBC or Bloomberg is that additional element of the community and direct access to experts. Are there other things that you guys provide that make it so, because I think a lot of people would say, well, why don't I just go check out CNBC.com or
Mhm,
something like
mhm,
that?
mhm. So I think the way that we differentiate ourselves is a couple of things. Number one is we provide smart, unbiased insights. And so what I mean by that is that um, the people who we've hired, they're not journalists, as for example on the CNBC site. They're actual analysts, so they tend to have anywhere from like 6 to 12 years of experience. We've hired people
Mhm.
from Goldman
Wait,
Sachs,
hold on a second there, Max. What's wrong with journalists? You got a problem with journalists?
so we made the experience that first of all, I don't have any problem with journalists, and
Okay,
we
all
have
right.
one journalist in house. But here's the thing. So we sell insights. That's the thing that we package for our users, and the experience that we've made is that in order to sell insights, not summaries, not breaking news, not investigative journalism, we want to sell you insights. You need to have that deep sector and industry expertise that you frankly only get if you've worked in equity research or a similar discipline for 5, 6, 7, 8, 10 years. And so we've that's kind of been this natural evolution that we've seen is like uh, people with that kind of profile tend to provide the best insights for our users, and that's why we hire them. Um, and so that's number one. Number two is they provide curation. So if you go onto any of these other outlets, um, you will be bombarded with information, and it's very difficult to understand what is important, what's noise, what do I need to pay attention to. And so our team of analysts, they go through all of this noise and they curate it and boil it down to the two, three, perhaps four most important things every single day that you need to know about. And then I think importantly, we everything we produce is bite sized. So if you come to us on a day, you probably won't spend more than 15 minutes with us because it's all been condensed to the essence. And equally as important, we are completely jargon free. So if you read the Wall Street Journal, for example, it's one thing for you to even understand what they're talking about because they're making so many assumptions in your knowledge. And then the second piece is there's so much jargon in all of this in all of this content. It's very, very difficult to really wrap your head around it. And that brings me to the final point, the insight piece. So we have a key question that we always answer for our users, which is why should you care? Why should you care that interest rates have gone up? A Wall Street Journal, a CNBC, they will not tell you that. You come to us and we explicitly lay it out. Here's two ways how this will affect you, and here's why you should care. So that, in a nutshell, is how we think about differentiating ourselves.
Okay. That sounds a bit like the Why It Matters in the Axios Markets newsletter. But anyway, we'll move on
maybe you guys copied that from us actually, because we had that from day one.
Oh, whoa! We are the inventors of smart brevity over here at Axios, my friend. You don't want this. You don't want beef. I'll tell you right now.
Well, the why should I care
squad war started.
I think for us the most crucial question that we've been answering since day one. So I think for us that's at the heart of what we're doing. And I'm a full supporter for every other outlet to go down this sort of explicit question outline. I think that's a really, really useful way of consuming content, and I think with smart brevity that you guys do is also really, really strong. I think why it matters is a slightly different question than why should I care, just to be clear. And why should I care is a very explicit question that we try to answer for you as an individual investor.
All right. I got that. So looking at that, why should I care? Obviously, the financial industry or folks investing, right? Robinhood has seen just massive growth. TD Ameritrade, E-Trade, really all of the online brokerage platforms, ways to invest have just seen huge growth. Have you all experienced the same thing? And what are you finding is the most common thing among new users to Finimize?
So what we have not seen a dramatic spike in users as perhaps a Robinhood platform has, and the reason for this is that we do not cater to day traders. So the way we describe our typical user is a casual investor. They're not day traders. But they want to be a bit more active than just putting your money into fund or a robo-advisor and forgetting about it. And they're willing to spend a couple of minutes a day, like I said, reading or thinking about investing and finance more generally. And what we have seen, though, is a really meaningful spike in engagement. So people checking in more frequently into what's been happening, because so much has been happening and there is so much noise out there, which brings me back to this curation element, so that they come to us as a source of curated information that they can trust, that is not trying to sell them or have them transact a trade or something like that. So it's really about the engagement for us, and the growth has been the steady growth that we've been working with previous to all of this stuff happening with COVID, etc.
That's very interesting. Because, like you say, it's a really interesting time right now in the markets. And Finimize isn't free. There are some things that are free. There are some things that folks have to pay for. Can you just break down that line and what's free, what you have to pay for, and why you charge the fees you do?
So we started off with a free newsletter. and we put a lot of high quality content out there for free, and we monetize that through native advertising. And the number one request that we kept receiving from our users was, we want to have more content. We love the newsletter, but those are just 2 stories a day. We want more. And we thought a lot about what are the different business models that we can apply here? How do we make sure that we're 100% aligned when it comes to incentives with our users? Because at the end of the day, it's all about trust. And then also, what's a interesting business model that allows us to really invest into content quite heavily. And we decided to build a premium membership. And so the premium membership gives you access to our full content library. So text, audio, all available in the app, and soon to be also all available on the web. And there we have a growing library every single day, where these analyst insights that I was referring to at the start. So you get all of those. Then you get a full library of audio guides on any topic that you can imagine on, whether that's how to think about investing in gold, all the way to how to think about evaluating Alphabet / Google's moonshot business when it comes to the stock price. And you get that, and then the final piece is you get access to the premium community. We have very active chat groups where people exchange ideas, exchange experiences, use each other as sparring partners, and we have also premium events where you only get access to if you're a premium member.
Okay. So is the premium, the attraction or the draw there more the analyst insights? Because I'm thinking, I could go to Seeking Alpha, or I could go to any of these other sites online that offer some of those same things, or is the premium draw more the community?
So we think about it as people come for the content and they stay for the community. And that's also what we're seeing in our data. So people come to us for these analyst insights, but also for that full content library of these guides that I was referring to. And what we see is that as soon as they start engaging with the community, the retention rate of these users more than doubles. And so the community for us is a major retention driver, whereas the content for us is the hook that gets people interested.
Gotcha. All right, last question I'll ask you. What does your situation look like for 2021? What's Finimize doing in 2021? Are you seeking more investment? Are you seeking new investors, partners, things like that? Or what's the big plan for 2021 for Finimize?
So I think for us, it's all about 2 things, and it's really those 2 pillars, content and community, that I was referring to. So we want to heavily invest into both. And so what I mean by that is really expanding our content library. We've been hiring analysts this year, and we want to continue to hire analysts so we can provide a broader coverage, all in the Finimize style. And then think about ways and build tools and platforms within our ecosystem that will allow our community to interact even more with each other. And I can't talk too much about that, but I think that probably for me is the most exciting part, because community is so much at the heart of our brand and of our company. So anything that we can do to bring that more and more into our app and into our web experience as well, to strengthen those connections and those interactions, that's definitely something that we're going to double down on in 2021.
Okay. An actual last question I'll ask you. I don't know if you saw the item today about Massachusetts filing charges against Robinhood, saying that they used advertising to suck in less skeptical or less savvy investors and did not provide them with sufficient information. What is your make on that? And do you feel like we're going to start seeing more regulators coming after people in the industry or different providers like Robinhood?
I just saw the headline as a push notification. I didn't read the story, so I won't comment on that specific story. But I think the broader trend, this year reminds me a little bit of 2018. with the whole crypto hype, and like
Mhm.
everybody and their grandmother was getting into Bitcoin. And what that I think had a lot of casualties. But what it also did is, I think it really brought in a whole new generation of investors who perhaps the hook for them was crypto in 2018. But then they started to dive a bit deeper and started to broaden their horizon into perhaps more traditional investing and more traditional finance. And so I think that was a really interesting catalyst. I think something similar is happening this year with this whole day trading phenomenon, where likely what will happen is many of these people will realize that day trading is probably not the right thing to do, but they might have discovered a curiosity, an interest, perhaps even a passion for being smarter about what they do with their savings, and starting to invest it, but in a more long term fashion. And I wouldn't be surprised if that's what's going to happen. And I think when it comes to these platforms, I think it's sort of there's two sides to it. One is it's great that we have more and more of these tools and platforms out there that democratize this access. On the flip side, you obviously need to make sure that there is enough financial education happening so that people actually know what they're doing and why they're doing it, rather than just doing it
Mhm.
because it seems to be current hype. And we've seen real fatalities result from this. Um, and obviously that is a massive downside of this democratization trend. But I think on a net basis, I'm an optimist that with the right information and education, that this will be a positive trend.
All right. Max Rafaga, founder of Finimize. Thanks so much for being with us.
Thank you.